I get asked this question on a daily basis, and it goes like, how can I increase my win rate? And what better way than to just create a short but detailed video explaining how, and it goes by the name of candle confirmation. So welcome back, ladies and gentlemen. I hope you're all doing well. In this video, we're going to be discussing candle confirmation and how it can increase your win rate. So without further ado, let's jump into it. Now, what is candle confirmation? Now, candle confirmation is a way of entering the markets. When you have a POI, which is a point of interest marked up, rather than entering off that POI blindly, you can wait for candle confirmation. This will help increase your win rate. It is also simple yet hugely effective, and it also helps with just being genuinely patient. So guys, let me ask you a question. Have you ever noticed how the POI that you have marked up ready to trade from just gets violated, quote unquote, blown through, therefore taking multiple losses? If you have, well then using candle confirmation will definitely help get rid of that. So let's jump onto the charts and I'll show you guys an example of what it is in terms of the textbook, and then we'll jump into some live examples with some of the trades that I had taken. So to put it into its simplest terms, you're essentially looking for a closure below the previous opposite open candle. So let's just say you're looking to buy here, right? You got your demand zone or your POI, however you'd like to refer to it as, and you got a series of bearish candles here leading down to this POI. Okay, rather than just blindly placing your buy limit there or just buying manually without any sort of confirmation, you're essentially looking for a bullish candle that closes below the previous opposite candle open. So in this case, the bearish candle opens. Obviously, you got the open here, price closes and opens to a new candle here. Okay, we've got the closure here. What you're looking for is a closure on the next candle, the bullish candle, because you're looking to buy above the previous opposite open candle. So in this case, open, this bearish candle open. Okay, so as you can see, we get a closure above here, we get this candle which just closes here, and then you want to buy from there. Okay, that's very simple. Now it's important to wait for the candle to close. A lot of people just rush straight in without candle closure, and even if there's like 10-20 seconds left in that 1 minute candle, a lot can happen. And usually a lot of the time, price will come back down below and close back within that range. That is not a candle confirmation. Okay, so it's important to wait for the candle to close above and actually close. Wait for the price to hit that 1 minute mark or whatever your execution time frame is. For me, it's the 1 minute. Okay, if you guys would like to learn more on how to execute on the 1 minute, actually in a consistent basis, make sure you check out my mentorship. Going back to the bearish scenario here, so let's say we're looking to sell. We've got a series of bullish candles leading into the supply area here, and then the next candle opens here, the bearish engulfing candle. So you're essentially looking for an engulfing candle, and the candle opens here. We then close below this previous bullish open candle. Okay, and that's where we would look to sell and buy. Now, before I jump in and show you guys some examples in the real life market, examples of some trades, I'm going to get asked, how do you calculate your position size? And the truth is, I have predefined stop loss, but also it makes life easier when you have a software like Magic Keys. If you are interested in getting Magic Keys, guys, use my code on screen now. You can go ahead and get 25% off there as well. So definitely check that out. It's a very useful tool and software in general. So if you are interested in that, make sure you go ahead and check that out. And yeah, going back to the video anyways, guys, I calculate my stop loss and position size anyways beforehand. I just have a predefined position size beforehand. I actually enter the trade because obviously we're entering with manual execution and you're waiting for that candle to close. So the stop loss could differ. So have just widen your stops and have calculate beforehand, and then just get it ready to to set. Then once obviously the candle closes, then boom, enter the trade. But yeah, just calculate beforehand rather than doing it there and then, as you may miss the move. So what I'll do is now, guys, we'll go ahead and jump into some real life market examples. Now, I'm not going to go into depth and give you guys like huge, crazy, in-depth detailed analysis on why I entered that trade. But as you can see here, M1 supply chain, target down to this M1 zone here. Nice bearish engulfing candle here, which closed below the previous bullish open candle. Stops nice and wide. Targeting down to here, TP hit. Moving on to the next one. As we tap into that M15 zone, which M1 refined as well. Nice bullish engulfing, targets nice and hit there as well. Very clean. Moving on to this one, as you can see here, M1 mitigation. We get a nice engulfing. Obviously, you got this candle here. So we need to see a breakout above, above that range, which we do get here. So we got a nice engulfing candle here with a closure below here. Well, a closure above this high, and a nice entry there. Stops below the zone, or even the low even on targets up here. But unfortunately, this was a break-even trade. This was a nice big trade. As you can see, we got a nice mitigation of this imbalance on this zone here. We then break above this zone ever so slightly with this candle here, and closure there, entry there, and it was just slightly dragged to the right, but that's where the entry was, and that was a nice big trade there that I'd taken with the news. And next up, we got this one here. We got a nice engulfing. As you can see here, we don't engulf here as we don't close above this previous bearish candle open here, but we do, however, get this nice engulfing here. So we close well above those highs while we open there, and we get a nice closure there, target into this zone. Very nice trade. Again, nice closure above this previous bearish open candle here. So hopefully, you guys, I'm just trying to show you loads of examples. It just sort of sits there in your subconscious, and hopefully you guys are getting it. But as you can see there, we get a nice closure above there. We also, again, on supply chain, engulfing candle, stops above the high there, targeting down to its low. Very pinpoint. You go ahead and pause the video and look at the recaps, or look at the trades if you want anyways. Into the structure, M1 demand chain, get a nice engulfing there as well. Again, coming down to the zone here, we got a nice little M1 demand chain leading to this supply area here. Engulfing candle, starts below the low there. This is a recent trade. As you can see, we got a nice bearish engulfing candle there, starts above the high, targeting down to this low. Very simple trade. And lastly, we got this one here, because I can go on all day and show you guys loads and loads of examples, but I don't need to do that. And as you can see here, engulfing candle above here, and we get a nice closure there, entry there. So that's pretty much it, guys. Like I said, you can go ahead and look at some examples if you want. Pause the video, go take a little detailed look. But most importantly, what I would recommend, if you haven't already applied this, if you're not in my mentorship, obviously, besides joining my mentorship, I would recommend going over and review your previous trades in your journal and look at your losses and see the reaction of the zone. Because sometimes when you have a zone marked up, like let's say for example I got the zone marked up, sometimes price will tap into it, but you'll have a buy limit, right? Which is fair enough. Sometimes I use buy limits as well, but about 90% of the time I do use engulfing candles or candle confirmation, just because it's a lot more precise. The only time I will use limit orders is when I'm not really on the charts. Obviously this requires chart time, but it's important to be on the charts there trading as well. But yeah, sometimes this can be applied to any time frame as well, not specifically just a 1 minute time frame. It can also be applied to 15 minute, 4 hour, daily, whatever. It's completely up to you, depending on your approach in trading. But the moral of the story is, when you have a zone marked up, sometimes you'll just see prices absolutely plow through that zone. So just waiting for that candle confirmation will definitely give you an increased hit rate, because if you're taking losses after losses just based on limit orders at the zone, you're not really getting into the trades with precision. Whereas if you're entering with candle confirmation, you're actually getting into the trades, and you're actually getting some nice winners. And don't get me wrong, obviously nothing's 100% in trading. It's not always going to work. Sometimes you will get the engulfing candle with the A+ setup, and maybe a bit of short-term profit, but then go on and hit your SL, or may engulf and then hit your SL. But it's just about it happens more often than not, pretty much, like of it working out. So like I said, nothing is 100% in trading. There's no such thing as a holy grail, so just make sure you get that instilled into your brain. But yeah, make sure you go ahead and practice this. Go ahead and backtest it. I'd love to see you guys at me in these stories on Instagram. Show me your progress, show me your trade, see how you're getting on. But yeah, that's pretty much it for this video, guys. Hope you guys enjoyed this one, and I'll catch you on the next one. Thank you guys for watching. Take care, guys. Let's go.